Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of GameStop, ticker symbol GME. And so I wanted to go over the chart because I noticed some interesting things with the options data that does suggest that we're probably going to go a little bit higher, maybe to fill this gap, maybe to 36, I don't know, but maybe there could be a retest. So I'm going to break that all down in this video, my thought process, and I hope it's valuable for you guys. But yeah, looking at the chart here, I did have some drawings up here, and I just decided to leave the gap fill here, which is at a price of $28.55. We were at that price on June 11th before gapping down and then consolidating in this range and actually trading below the 50-day simple moving average there. But we have recently broken above the SMA and broken out of that range. Maybe we get a retest of it, so I'll talk about that. But the options data, like I said, suggesting that this is going to be going higher. But before I get into the options data, the thing I do want to point out that doesn't necessarily look so good about the chart, maybe it's just me overthinking it, but just want to put it out there. As the price has moved up here, we saw this pretty big candle here, pretty big volume backing up that gap up, then retest of the range before starting to head higher. And so for today, so I'm recording this the evening of September 22nd, we saw a pretty nice green candle up here getting to new highs and closing at new highs over here, up 2.68% on the day, closing at 26.78. But with that big spread in the candle, we don't see that much volume behind it. So that makes me think, or at least makes me a little bit concerned, that we could be seeing a retest of around 25, bounce from there as support, and then go higher. So just throwing it out there, I don't necessarily think that's going to happen, but I think it could, so just be aware of that. And so what I really wanted to talk about in this video that really got me excited about it is the net call premium over here. So this is the net call premium in green, the net put premium in red, and then the stock price in yellow. So as we can see, stock price went up today, and then it consolidated. As price went up, we saw net call premium go up as well. And the thing that stood out to me is net call premium went up by nearly $6 million on the day. It looks like $5.89 million. So that's a lot of call premium. And then if we look over at the net put premium, that came down over $500,000, came down by $563,000. But, that's effectively flat relative to the call premium that we've seen. So that tells me that this is looking pretty bullish. We also have a lot of green volume there, suggesting there's a lot of buying in calls. And I'll look at this a little more closely, specifically looking at this big jump here that occurred at around 9:40, 9:41 in the morning. Saw an increase of about $2 million in that net call premium. And so that suggests to me that there was a big buyer. They're betting on this going higher. But again, we'll look at that in a minute. Really, what I want to see, thinking about this call premium here, is $6 million a lot for GameStop? So one way to kind of get an idea of that is by adjusting this to go to 30 days so we can see, was this $6 million high? Was it elevated? Is there a lot of call buying or potential call buying that stands out over the past 30 days, going back to August 11th? Excuse me. And as we can see, we are at the highest amount of net call premium in the past 30 days. And we actually saw a pretty nice spike. If I adjust this to 7 days, we saw a pretty nice spike on September 16th with net call premium going up over $4 million. So up about $4.2 million, whereas on the same day, net put premium came down by about $1 million. So that suggests selling of puts, buying of calls. That's bullish. And we saw the same thing today, but more so on the call side. This is looking good. But anyways, getting back to the 30 days, and this date being August 11th. I'm curious to see when the last time that GameStop had call premium above or right around $6 million. And so a way that we can do that is go up here and we can adjust the calendar. We can rewind going back in time. And so I'm going to set the date to August 11th. That's the date that's over here, as you can see. So I'm just going to adjust that there. Now we're going back in time. What's the highest, whether it's call or put premium? What's the highest it's been to the upside? Let's forget about the negative here for this. Over here, 2 million, that's the highest. So not 6 million. So going back not just 30 days, but 60 days to June 30th, we haven't seen call premium up more than $6 million. So very interesting. I said June 30th. Let's rewind a little bit more. So if I go over here, we can go to June 30th and see, has net call premium been, 15 million, 30 million. So we've got some data here that we can kind of compare with today, September 22nd's net call premium increase. So over here on May 23rd and May 22nd, we saw increases in net call premium of on the 22nd, 13.76 million, and then on the 23rd, we saw 16.46 million. So those are some pretty big days in that net call premium, and we also saw the stock price go up pretty high following those spikes in net call premium. But then we saw a pretty big drop, and then following that, an even bigger drop, because that yellow is the stock price. So I'm curious if we might be getting ready for a big move up that might be followed by a drop. So let's look back over at the chart. Let's rewind over here to look at May 22nd and 23rd. So I believe that's over here somewhere. So May 22nd, that's when we saw this first big green candle, went up over 10%, 10.02% on May 22nd, up $2.81 on the day. And then the day after that, we gapped down a little bit, but then quickly filled that gap. And that was on Friday, May 23rd, went up 7%, so very, very nice. But then just a couple days later, on the 28th, we saw a drawdown of nearly 11%. And then a couple weeks later, we saw this massive gap down. So with that being said, I'm wondering if GameStop is going to be seeing a pretty big move to the upside, maybe to fill this gap, maybe to get back up here, maybe to $35, $36, or maybe get into the range over here. Let's see. If I just draw a casual little rectangle over here, that would be from like 31 to 29. So 30 plus or minus $1. Maybe we could be getting into that range. So this consolidation, there were some buyers there. They might want to sell if price gets back up to their average, or if they were buying down here, take a little bit of profit where they entered. So that is something to consider. There might be some resistance above $28, $29. So do consider that. But like I said, I think that there's some bullish stuff going on with the data over here. So now I'm just going to fast forward back to present date. So September 22nd, going to switch this over to the 1 day because I want to highlight this spike here that we saw at 9:40 when net call premium was about $202,000. And then just a minute later, I'm just going to slide that over a little bit to 9:41. Net call premium increased from $202,000 to $2.61 million. So that's a pretty big buy. It suggests about $2+ million bet that GameStop's going to be going higher. And so I did some investigating. I looked into a spike that was about 2 million. Here it looks like the candle premium at, let's see what time, between 9:40 and 9:45, so that matches. We saw a candle premium of $2.3 million. That also matches the increase that we saw over here. This is the exact same chart here. It's just shrunk a little bit so we can see the chart here. And so what contract is this? Is this suggesting that there's some bullish stuff going on? And so this is the $20 call for GameStop that expires in January. So we got about 115 days between now and expiration on January 16th. And yeah, I mean, so that's a pretty deep in the money call. GameStop looks like in the after hours or overnight, I'm not exactly sure, but right around $26 to $27. So, that's a pretty deep in the money call. It's quite possible, though. I don't know if I get Ed to step out of the way. It's quite possible, though. I'll let you know in the morning that there was some selling. It looks like there's been some selling of this contract. So on, on Friday, so the 19th, there was a volume of 4.4 thousand contracts traded, which led to a decrease in open interest of about 2.2 thousand contracts, going from 31,000 to 29,000 open interest. However, today we saw 3.7 thousand contracts traded, and that volume, we'll have to see if that rolls over into the open interest for Tuesday, September 23rd. If that goes up to 30, 32, 33, I guess probably not 33. 32 would probably be the highest that open interest could go to. That would be suggesting that this person bought, that they're betting on GameStop going higher, and that, they would have the option to exercise these calls that would then, for each contract, represent 100 shares at a price of $20. So if GameStop's trading at $26.27 and you can exercise a contract with a strike of 20, you could be getting a lot of shares at a discount relative to current price. Market makers would have to provide those shares, which would either mean that they would be relying on covered calls that retail has sold, that they would then use those shares to then cover this, or they would have to buy shares to cover this, and then price would end up going higher. As a result, that would be like a gamma squeeze. So I think that we could be seeing that. So that's pretty interesting. And so I will have to follow up on this in the morning, what the open interest is. If it has gone up, I suspect it will. This does seem like it was a buy with all this green volume, stock price going up does make a lot of sense. But another thing I did want to point out is, this is looking at the flow or the flow feed in Unusual Whales. So up here, if you notice, I searched GameStop, and over here I had the premium minimum set to $200,000. The reason why I did that is because I wanted that contract at 941 to show up here, but I didn't want to have a lot of other noise. So these two contracts were either bought or sold today on September 22nd. And so this is something that maybe suggests there's a little bit of concern. And so at 11:51, there was this call, $29 strike with the expiration in January. And that was on the bid side. And so that does suggest that it's bearish. That does suggest that somebody was selling, but maybe they were buying, You don't know. We don't know. We'll have to find out. We'll have to look at this data in the morning. But one thing that we do notice, if I look at that little exclamation point there, it says that volume has exceeded the open interest. So either somebody is selling covered calls, or they're buying shares, and it just looks like they got a fill on the bid side rather on the ask side. And so this could be bullish as well. And so this candle, let's see over here, was at 1150 to 1155. And so what do we see in that call premium at around 1150? We actually don't see anything too notable. We see the big $2 million spike right here, but nothing too notable over here. So that doesn't make me, too concerned that we see bearish, even though the premium on this one was 261,000. The other one that I was just talking about, the $20 call, that had a premium of 228,000. However, we see the candle premium, and that's going to be comprised of a number of buys. I think just market makers, getting, those contracts from different sources and whatnot. And so it really just shows up as, this one order here for 228,000, whereas in reality, it's over 2 million. So this seems very, very bullish to me. It does seem very good. Now, also, I did want to note the max pain. So if we look over here, just scrolling down, I had searched GameStop. We can see GameStop historic max pain. We can see that price over here. Maybe I'll zoom in so we could see it a little bit better. Just above me, price in the gray, well above that max pain. So where the cursor is, I was going to say July. I was going to say June, then July, September 22nd. The closing price was $26.78, max pain $25. So that suggests that, bulls are in control, prices going higher. However, over here, this was like the end of May, price was going up really high, well above that max pain, but then it, drew down. So I don't think we're at that point yet, but I do think we could be in this area where we start to move. So maybe a week or two from now, it could be, caution time that we could be seeing a pullback. So good to consider that. But anyways, the max pain for this coming Friday, September 26th, is $25. We're above that by multiple strikes, so we're looking good. And then for October 3rd, the max pain is $24. Again, we're above that by multiple strikes, so looking really good. And then October 10th, $23.50, October 17th, 24th, $24. All these strikes are well below current price by multiple strikes. All these max pains, I should say, until we get to October 16th of 2026. And that max pain is $30. So I think that GameStop seems pretty likely to be heading towards $30. And if we do get a pretty volatile move to the upside, maybe we head back up like this, above that gap, retest it as support, and then go up to 36 like we had in the past. I could see that, but then at that point, I think, maybe it's, raising some capital to buy some Bitcoin or something. I have no idea. But at that point, I think we could potentially be in the same type of scenario, but rather than see a pullback and then a gap down, maybe what we end up seeing is, maybe what we end up seeing is a little bit of a retracement, but then to bounce from there, find that as support, and then continue on our way up. So those are just some ideas about that. And one thing that I did want to throw up just to, mention the possibility of us pulling back to retest the top of this range. If I do draw a Fibonacci retracement from the base of that range up to the gap fill, being kind of arbitrary, maybe we get there and then maybe we get rejected. There's a possibility with that as well. And if we do get rejected, the 50% retracement is right around $25, and that corresponds pretty nicely with the top of that range. So another scenario that we could see is if we do go up to fill that gap, maybe we pull back like this and then start to go higher following that. Either way, I like GameStop. I like the stock. Options data is looking good. The chart not looking as good as I would like, but maybe that's just to, throw off overthinkers like myself. And so anyways, I'm excited about GameStop. I think that 30 seems pretty likely in the coming month, let's say. I think 36 seems possible, but likely not sustainable. And so, I think that we're probably getting ready for some big moves on this. I don't know that it's going to be taking us back up to, the 60s. I think the 80s over here in May of 2024. I think 88 or something like that was the high. I don't know if we're getting to that territory, but I think that, from current price, we could be looking at a move of around 40% to the upside. But then that, to be cautioned, could be followed by a retracement of about 20%. But I think the chart could be looking better. I think the options data is looking phenomenal. Really excited about it. And Ed and I wanted to share that with you. But anyways, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Hopefully it was valuable for you. I'm excited about it. It's valuable for me. I'll see you in the next one. Take care, guys. Bye.